Hello and welcome to my morning report analysis videos on Friday the 6th of April with me, Richard Perry, market analyst at Hantec Markets. Spoke about this earlier in the week about trade tariffs and the fact that the situation was getting better, and subsequently we've seen Donald Trump coming out and ruining it again. Well, not ruining the whole situation, but suggesting that he's going to escalate everything further. And subsequently, they're sort of talking about an extra $100 billion worth of tariffs. And China are not going to take that particularly well. And subsequently, what we are seeing today is sentiment has been hit on the back of that. Let's have a quick look at the board. And you see equity markets, which is basically where the pain does get felt anyway. Equity markets are all down. Not too badly, but down. And again, the DAX underperforming on the way down, interestingly enough, as it's very much an export-heavy index. What we have also got is interestingly very muted response on FX markets, and that is coming ahead of non-farm payrolls today, which is this afternoon going to be the key focus as markets responded to that this afternoon. But at the moment we're seeing that very little real move. Yesterday we saw the dollar stronger. However, today it's sort of broadly going sideways, and you can see that as sort of treasury yields have just dropped back a touch on the 10-year and the 2-year. You've got here's the VIX, where just little increase in volatility, nothing too significant, but you can see here 91, massive level, big old support on September, new resistance from March, and also around about where, well, now that downtrend is below that, but that is a long-term downtrend on the dollar index dating back to this time, or just before this time last year. So between 90 and 91 is a key resistance level on the trade-weighted dollar. So that makes, I think, today's payrolls report very important. We are waiting, certainly on the FX markets, for this payrolls data to probably drive a bit of direction. Here we see the expectations, 193 on the headline. Now, what I would say is in 4 of the last 6 payrolls for April, or with the March data I should say, we've seen big misses on the non-farm payrolls, so watch out for that. In terms of what the market will be looking out for, average hourly earnings generally now tends to take the main focus. You get the algo-driven moves initially, but then they work off the average hourly earnings subsequently. Average hourly earnings expected to increase to 2.7% with a 0.2% month-on-month reading. But yeah, watch out for that. So it's the average hourly earnings that the market really does tend to focus on today, and that could certainly drive the moves of the market into the afternoon. But at the moment we're fairly stable, aren't we? Not a great deal of direction. So my chart of the day is Euro CAD. Now Euro Canadian dollar has been dropping away, forming a top pattern below 157.60. Now that sort of has produced this sort of corrective move, which has broken this uptrend. You've seen the market trading below these moving averages, and I think a retreat back towards 153.70 could easily be seen, because that's pretty much around about where the implied target from this top pattern brings us to. But look at these momentum indicators. That RSI tracking lower below the 40 level. MACD lines accelerating lower. Stochastics in bear configuration. This does look like a lower highs, lower lows market where the rallies are being sold into, and I think that needs to be taken into consideration. You've got initial resistance from yesterday's high at 157 area, neckline at 157.60 as I said, and then the level on Wednesday, which was 157.96. So basically between 157 and 158 you've got a resistance band near term. That reaction high at 157.96 was basically a pivot, wasn't it, of that reaction low from late March. So you've got this sort of 100 pip band of resistance overhead, and I think that's a pretty good sell zone near term. you've got this downtrend that is forming, new downtrend, and certainly confirmed on the RSI, and the MACD line is accelerating lower. So looking decent for a rally to be sold into. And you can see that the resistance around 158 on the hourly chart, 157, which again is a bit of a slight pivot area, isn't it? 157.80 area, 157. Sorry, 156.80, 157. So I think any sort of move to unwind this would be a selling opportunity. You can see on the hourly chart now, throughout this sort of corrective move, 60 on the RSI has been sort of a limiting area. Got to 50 this morning before falling over. Anything around neutral on the MACD lines on the hourly, again, selling area. There is room for a little bit of an uptick towards 157, I would add, but I'd be looking to use that as a chance to sell now, because I think this one is going lower. NAFTA certainly helps to drive a more positive CAD. Certainly if they get the NAFTA agreement coming through, that would drive a positive CAD. So that would be dragging Euro CAD lower. So I wish you good luck in your trading today, and I will speak to you later.